great to have you all here. In particular yourself, Your Excellency, because you are setting this panel up in a way for us. I want a little bit of a platform from you, but I think you have something of a challenge for these chaps here.
Well, thank you, David, and good afternoon to everybody here. And the 18,000 we have in the building, or we have participants, but mostly I want to welcome back the 5,000 partners and participants that have been coming back for the last their last time, or 3 times. And also welcoming the 8,000 who traveled from all the way around the world to come here to start their year in Riyadh in Saudi Arabia. So thank you very much for all of them, and welcome to Saudi Arabia. David, the challenges we heard a lot about the material transition challenge, as the material is required for energy the 4 times or less or more, is a major challenge, is a grand challenge that we are having. 200 years, the last 200 years, we've been building the current energy system. Now the requirement is to change that energy system in 20 years. That's 10 times faster we need to go, and this is unprecedented. I can put the challenges in 3 challenges, and maybe my fellow panelists, colleagues, and experts can help. The first one, of course, is policy. We heard this morning that mining is the least trusted, but we need to streamline permitting processes. We need faster permitting if we are to deliver on the material transition. And this is one on the policy side, but also the recycling, encouraging collection, recycling policy. The second one is innovation, and we need to do more. There is a lot is going on in the recycling technologies and more in the battery minerals, but more need to be done in the material intensity and also in technologies for extraction. The largest part is the supply. The supply required to cover up for this 4 times, and the shortages in supply with a time required for delivery is huge, and investment in this is large. The estimates we have from some of the experts is we need 3 trillion to be invested in mining, refining, and smelting to cover up to 2030. We need maybe 1 trillion into infrastructure and another 1 trillion in power generation. That's a 5 trillion. That's almost more than 3 times the current investment status. More than that, we need 200 to 400 engineers, professionals, mining professionals, while mining engineers on the past decade has been in the decline. So we need more of them, more than what we do have. Those all challenges in Saudi Arabia, we have made our share. We have worked on a number of them. We are investing, but maybe I'll come to the Saudi part later when the expert here, the bankers and the traders and then the investor will tell us where we're going to bring those money from.
Okay, that's a fair point. We'll come back to that then. Let me go right to the far end straight away. Jeremy Weir, are you pulling your weight? I mean, I think that's the bottom line of what the Vice Minister is suggesting.
That's a harsh question, but yeah. Look, we tend to focus on supply chains. That's what we do. We procure from all regions around the world. We actually operated in 150 countries last year, and we had a turnover around 234 billion, so across the oil, minerals, metals, and space. So it's quite very diverse. What we're doing is focus on where we can improve the supply chains, because what is, from a geopolitical context, and even post-COVID, we've seen a lot of fragmentation of supply chains around the world. So whereas people are looking for efficiency historically, we're still looking for efficiency, but they were quite comfortable with single source supply. That's no longer the case. And they're also looking at the carbon footprint and other issues around the supply of the various products that we do. What are we doing? We're trying to improve those supply chains. So therefore, for an example of that is, together with partners, we have 2 other partners, we were successful in securing a long-term commitment for operating a railway line in Angola, which is from the port of Lobito to the border of the DRC. And what that is going to do is quite transformational. It now takes approximately 5 weeks or longer to move materials out of the copper belt of Zambia, DRC, into the various marketplaces, be it sort of through the various routes. This railway line has a capacity of up to 1.5 million tonnes. It'll not take 5 weeks, it'll take 5 days to get it to the coast. So the impact both on society, on carbon emissions, and obviously costs are going to be very significant. So from our perspective, what we're trying to do is, where can we invest in supply chains? How can we improve the efficiency of those supply chains, despite the fragmentation that takes place around the world today?
It needs a lot more, I'm not saying Lobito corridors particularly, but a lot more infrastructural effort like that. What was the sense of investment risk, I suppose, for a project like that?
Well, look, at the end of the day, first of all, you want government support. And what was, I attended the opening, and what was very encouraging, you had the 3 heads of state of Angola, the major host country, of Zambia, and also the Democratic Republic of Congo. You had, if you like, a concerted government support for that project. And the fact is that there's a real need to get that product to marketplace. There's rapid expansion. The DRC is battling with Peru to be the 2nd largest producer of copper in the world. So we need the volumes to get to marketplace efficiently. So therefore, from our point of view, how do we de-risk it? The supply is going to be there. Yes, you could argue it's challenging environments. And the third part, from a funding point of view, we are working with the US government for funding as well. So therefore, there's lots of support from other major stakeholders to try and make this work, and that gave us a confidence.
You used two phrases there about de-risking, but a challenging environment. Gareth, I'll come to you on this. You're a long-term investor and with a long track record to go with it. Would you have invested in that?
David, I can't comment on a particular project, but I mean, just very briefly, 91 is an asset management company. It has $160 billion of assets under management. About 60% are deployed in emerging markets. So we have a very long track record of putting our money in places where, others may think that they are higher risk. And actually, you raised the question of risk, and I wanted to talk about that and address it head on. One of the funds we manage is an infrastructure fund, and I was just looking at some of the statistics on that. This particular fund is a $2 billion fund. It's been operating for 19 years, and it's invested in over 100 projects in Africa. And in the total time period of 19 years, it's only lost 20 million in bad debt. And the point I'm really making is, if you look at the risk on that, it's way less than 1%, but yet the perceived risk would be so much higher. So I think one of the great challenges we face in ensuring the kind of adequate flow of capital is around communication, because it's clear to me that this is an area we need to get far better at as an industry and as financiers of the industry, in terms of communicating the opportunities and how actually there is a misperception between perceived risk and actual risk.
But is that a misperception in terms of risk about mining as an industry or geopolitics, or both?
I think it's both. I also think it's this thing that, if you take Africa, for example, people call Africa. Africa is 52 countries. They each have their own risk. They're each different. They need to be considered on their own merits. And I think as we look into the future and we see how we would work with many different countries in the region or the super region, I think one's got to make sure that, one has people who are familiar and able to look at each project on its own merits. Can I come back to one other thing, David, that you raised, and in answer to the minister's challenge, what are we doing and what are the opportunities? Because the whole theme of this year's FMF is around how we turn words into action. And what we're excited about as a business is the opportunities to do business here in Saudi, and particularly, I think, to use Saudi as a springboard and as a hub to become a mining finance center for for the region. And we're actually in discussion with the minister around an idea that we have, which he's familiar with, and we're excited by. And that would be to see if we can provide capital in different ways to, the mining industry. So there are some real opportunities, I think, going forward for us to step up.
And yet, I keep hearing about the huge investment gap in exploration, in excavation in particular. So an awful lot more needs to be done. Frank, can I bring you in here? Gareth was referencing Africa there, and that is one great chunk of this super region that we're talking about. But how do you then satisfy the Vice Minister in terms of commitment to parts of Africa, for example?
Yeah.
When we're facing, I think it's 18 elections this year. Many of them, frankly, will be contested, as in disputed. That is one tip of a myriad of challenges, let's put it that way, which might well dissuade investors from wanting to commit.
Well, I think as investors, and to answer the Vice Minister's challenge, I mean, you really have to understand what's happening in the shifting geopolitical landscape of Africa itself. Africa is arguably the most prolific and mineral-rich continent on the planet. And as a result, it's become sort of the battleground for a number of different players. And so now what you're seeing in Africa recently, this is just in the last few years, you've seen a rise in insurgencies throughout Africa, mostly in the Sahel. You've seen the exit of France as a neo-colonial player from the Sahel. You've got the Russian Wagner Group in Central African Republic, Mali, Sudan, failed attempts in Mozambique and Madagascar, and Burkina Faso and Niger are now toying with the idea of inviting them in. You've had 7 military coups in the last 3 years, 9 if you count twice in Burkina Faso and Mali. You've had a 20-year U.S. counterterrorism campaign, who knows for what reason, and all it's fostered is more insurgency attacks. You've got 2 civil wars. You had the civil war in Ethiopia with Tigray, and now Amhara, the region is boiling over. And now you've got new regional players in there. You have the kingdoms in there, UAE, Qatar, and to a lesser extent, Turkey. And what we all need to ask ourselves is, what does Africa need out of all of this? Because that's really important at the end of the day. And I'll tell you what, you have to start by asking what it doesn't need. It doesn't need to turn to military coups when their elected leaders have failed them. It doesn't need to hire mercenaries, foreign mercenaries for protection when in exchange for mineral rights.
No, but sorry to stop you there. You say it doesn't need those, but that is what's happening.
Well, I'm telling you, then I'm going to tell you what's going to be needed, though, okay? So it doesn't need the West to label China as evil and its investment, which has been very important to Africa, as being unfair. It doesn't need Western institutions to lecture on structural reforms where the same host countries of those Western institutions would never impose those same structural reforms on their own economies. What Africa needs is trade, investment, and development, and it needs to be treated with respect, and it needs to have a hope for the future. And I think this is where the kingdom can play a really important role as a non-aligned geopolitical player that has relationships with all the great powers to be partners with Western companies. Because when you look at political risk in some of these countries, a lot of Western companies are very shy about taking on that political risk, especially when you're looking out 10, 20 years to develop a resource into a mine. And it's nice to have an 800-pound gorilla as your partner. So that is my take on Africa. But I really think we need to think about Africans and what they need for the future. And I think the needs of the West and the world at large for critical minerals shouldn't be mutually exclusive with the fact that Africans need to prosper.
Right, 800-pound gorilla is a compliment, not an insult. Tom, you obviously do a lot of work within Africa, a lot of investment. I wonder which side of that coin you feel strikes sort of closest to the heart in terms of the reality of what you face.
No, it was very, very well put by Frank. I mean, so we at ICBC Standard Bank, we have one foot in Johannesburg, if you like, and one in Beijing. That's where our two shareholders are, and we work everywhere in between, as well as in Latin America and North America as well. And yeah, look, the fundamental truth is you can move your capital around. Your capital will move to where it feels welcome, to where it's going to get a return, but you can't move the geological resources in the ground, right? So if the projections of copper going to $12,000, $14,000, $15,000 a ton because the world needs another 10 million tons, 15 million tons, whatever, that is going to incentivize capital flows. It's going to create tensions interregionally. It's going to create more tensions on the ground. And so for me, the kind of frameworks that this sort of event established and the interlinkages that get established at this kind of event are very important if you're going forward into that kind of environment where the incentives and the rewards for being involved in this sector are increasing exponentially.
Those frameworks you mentioned, for one or two examples of what you're seeing. Its risk threshold if these hugely ambitious targets are to be realized and if these minerals are ultimately to be mined and processed and supplied and delivered to transition our energy?
I'm not sure it's about raising the risk threshold. I think it's more about alignment of the different perceptions of risk and the different coming together with different motivations and incentives and reward structures. When you're talking about, as you have to be in this kind of environment, intersection between the public sector, the private sector, NGOs, multilateral institutions, all of those kind of sectors of our world have different time horizons that they think on, different return metrics, different shareholders that they have to please, and it's kind of getting to some, hopefully not quite as small as it is, point on that Venn diagram. It's expanding that center point so there's greater overlap, and we can get things done without having to go through the 10-year permitting processes or the 5-year legal battles or whatever else it is.
Quite. Alec, I wonder, from the Vice Minister's comments, whether you think things are as bleak is the wrong word, as challenging perhaps as they sometimes sound. I mean, you obviously, you're trading in many minerals all the time. Some are more plentiful than others in any case. How much of a problem is there in terms of supply and excavation?
So you kindly introduced Traxys as having a 100-year history in trading in future minerals. And we simplify the supply chain for suppliers as well as for off-takers. The logistics Jeremy alluded to, but also the working capital financing that we unburden the suppliers from, as well as the off-takers, and we manage that physical risk as materials flow from origin to destination. And so we do this across 65 different metals. We only trade metals. We're a real pure play global supplier and trader of those metals. I think that the key for this industry is to remind itself of the basic laws of economics and comparative advantage. Do what you best and outsource the rest. I also tend to tell my wife that as it relates to our children. But I think it's true in this very complex industry where there are delays, cost overruns, uncertainties related to the geology. And so to have to, on top of that, spend your time thinking about logistics and working capital and using your capital inefficiently for that, that's where we come in and can really help take that complexity off the table and really smoothen the entire global supply chain. That's our job. That's our reason for existing. It allows to avoid some of those bumps in the road that the minister was alluding to.
Okay, so let's park the bumps in the road for a moment, because I want to bring in at this point His Excellency Saad Al-Khalb, CEO of the Saudi Exim Bank. Your Excellency, I think actually, first of all, you've got an update, haven't you, for us in terms of funding and potential?
Yeah, thank you, David, for keeping me the last of the panelists, because I can hear a common statement here is challenges, which is typical in this industry. It's a long-term, capital-intensive, and carries more commercial and execution challenges than any other standard investment tools. Saudi Exim and similar entity around the world plays a crucial role in mitigating this risk by different type of investment, insurance, or financial tools. In addition, mitigating liquidity gaps that may face project owner, lenders, or investors, and even traders. So that's where we came as a state-owned and semi-state-owned entities to support the crucial industries that will take us to the future. For example, in Asia region, during the past decade, over 50% of the mining projects were provided by state-owned entities or through governments. So that shows that stable financing tools is really required in addition to the commercial lenders to support this industry. When I come to the update of the Saudi Exim, although we are a young export-import bank, started in year 2020 as part of Saudi Vision 2030 initiatives to support the growth of non-oil export of Saudi Arabia. Since inception, in less than 3 years, we did over $2 billion to these industries. And recently, on top of that, during the last quarter, we signed with Trafigura $500 million to support purchasing of commodity from Saudi Arabia, including minerals. So that maybe contribute to over between 20 to 25% of our current portfolio, young portfolio, to support this important industry.
Does that, Vice Minister, does that reinforce your challenge in a sense that shows how much is being done via and through Saudi Arabia, whereas perhaps you would like to see a greater effort from other parts of the world?
Yes, thank you, David. I think the summary of what the whole thing is that energy transition would require minerals to more minerals 4 times or whatever. And to get more minerals, we need more supply, and supply would require investment and exploration and infrastructure and in mining. But also need policy change and need innovation. And the super region, what we call the super region or the Africa, what they would need, the team has been, Frank and the rest saying, would need more investment in infrastructure, investment in exploration, investment in assets. We need to de-risk whatever risks that are there rather than run away and loot. Minerals need to come from a new jurisdiction. And Saudi Arabia is a new jurisdiction. Saudi Arabia mining is a new sector. We have worked hard. We know we are not attractive at the beginning. We made the assessment and we worked in many parts. Saudi Arabia first has a huge demand. We were the 4th largest net importer of minerals. We have a $2 trillion of projects. All these projects, construction progress, would require lots of minerals. We have an industrialization with a local content that would up to 60%. We have seen the EV manufacturing facilities of 300,000 and more, and the rest of the military and other manufacturing of the 12th sector all require minerals, and this would increase demand for minerals in Saudi Arabia, and that's why we brought in the mining strategy or mineral strategy, where we invested in Saudi Arabia. The first thing we done, we transformed ourselves to be an investor-centric. An investor journey is the language we brought from businesses to the government. So investor is a king for us, like customer are. And we have transformed ourselves. We made it digital. We have invested in the information, and the National Geoscience Database is one of a kind. It was not there, now one of the best in the world under our Saudi Geological Survey. We made a survey of the kingdom. Exploration, due to the new law, investment law, that's investor friendly and stable and ensure stability. We have 4 times increased the exploration licenses. We got into only 5 years and doubling our resource discoveries. We discovered new minerals like rare earth and niobium and other minerals and more copper. We also working more and more into our exploration here. Investment, today we announced a $180 million of investment incentive where we will pay 25% of the cost of exploration for all licenses. If the expertise are there, then we will pay so. So we will de-risk the country for more investment, more creation. And also Saudi Arabia, mining is not a financial fiscal play, it's an economic play. All the proceed we get from mining investors will go into a mining fund. That mining fund will help community, help infrastructure, last mile to help them.
And this is you've generated this very quickly, relatively quickly. I'm going to go right back down to Jeremy again to just reflect on some of those things. How much in terms of, I mean, that's an amazing track record there, but are there other areas that you can look at which perhaps de-risk, which certainly reduce costs? And I'm thinking here about technological advancements. I think AI is something which Saudi Arabia has deployed in terms of your geological surveys, for example, that would make your life easier.
We use advanced analytics, both scraping the web but also our own internal data to become more efficient. So we're using technology for that to, at the end of the day, what does it do? Just improves efficiency. I think one thing which I'd like to pick up though, and which I think is important, is that, you know, if you ask people about critical minerals 5 to 7 years ago, there was no comment around critical minerals. You ask governments about government policy about critical minerals, it really was very fledgling. We're seeing, you know, I think the kingdom has done an amazing job in terms of how it's motivated and really brought together a well-defined strategy and implementing that strategy. We're also seeing across the globe, you know, it's my job actually spends more than probably 15 to 20% with governments nowadays because they see the importance of supply chains in critical minerals. This is part of the energy transition. It's a fundamental change. And so therefore that to me is, that's the challenge we have to rise to, because at the end of the day, this is going to lead to an enormous amount of consumption increase, and we have to be able to supply within the right sort of time frames, within the right sort of economic parameters as well. And right now, we actually are quite struggling with that because prices are possibly not at the incentive levels. That's why government involvement, what the kingdom is doing, is actually taking a very, very long-term view, and that's critical.
But is it what you're saying, and maybe Gareth, I could bring you on this, that the potential investors don't yet appreciate the significance of the critical mineral story? Is that fair?
No, David, I think that story's quite well understood now. I think it could be better communicated by the mining community around the world. I think communication is an area that's been raised many times already. Where I agree with Jeremy is that I think the key to all this is partnership. None of us can do this on our own. Each of us has to do the area that we do best. And it's really, I mean, if I had to try and summarize, this is about partnership for the 21st century, you know, in terms of governments bringing stability, bringing certainty under law, bringing fiscal regimes that, you know, last for, the returns for mining companies take so long. I mean, we all know the numbers. It takes 12 years before you bring a project into production. It may take many more years beyond that upfront in terms of proving up the reserves and resources. So these are very, very long-term investments, and each party around this panel, and in fact everyone participating in this whole conference, has to work in a collective way if we're going to get to where we need to get.
But at the same time, as opposed to traditional minerals, perhaps, if that's the right phrase, doesn't this look like a bonanza? There's a bonanza out there, right? Yeah.
I think that it looks like a bonanza. It's many small bonanzas. They're all illiquid today, and that's part of the challenge. I think that one big innovation, more than AI, would be an ability to hedge, create exchanges for those illiquid metals. That would have a profound impact on the way that producers and off-takers can finance their flows. That would fundamentally change the way we would be talking about those minerals, the way you now commonly talk about copper or oil products that all have very active exchanges. They don't exist for those critical materials today.
Yeah, I think that's a very good point. And, you know, look, I graduated as a geologist more than 30 years ago, and when I graduated, nobody cared about hard rock mining, frankly. The United States still had a strategic mineral stockpile, which was selling off post the Second World War, and got that down to close to zero. And here we are talking about minerals that are now critical. And so I think, to Jeremy's point, it is a, you know, we used to think in cycles, and they were quite long cycles in the mining and commodities business. But if this really is a fundamental shift, and it does look like it is, then there's a lot of growing pains to get through, and there's a lot of dislocations at the moment in the early stages of this. And there's distortions of where capital is going. If you think of the Inflation Reduction Act, for example, a massive distortion of capital flows. And it's going to take time for that to fall out of the system. And I think, to your point, Alex, as we get more mature through this cycle, those exchanges, those liquidity pools will come through.
When I use the word bonanza, I know it's very Wild Westy and probably completely out of place here, Frank, but I just wonder what you make of that scene. You've got 40 years of building up mining companies.
I've been doing this for 40 years, financing. I've built and financed hundreds of companies over the last 40 years in the mining industry. And the important part that we're failing to talk about here, which is the most difficult part, the part that's needed the most, is the exploration. You have to find this stuff, and that's risk capital. It's really hard to raise in today's environment in the West, okay? The senior mining companies haven't been exploring. They've actually pulled back over the last decade after huge expansion in the first part of the century. They pulled back because they made a lot of investment mistakes and they had to write down those mistakes. And so you've got cash-rich senior mining companies, cash-starved junior mining companies, which have traditionally found all of the major deposits, and they eventually get acquired by the seniors. So now what I recommend is that if someone was speaking about partnerships, yes, that's absolutely right. What we need is for the senior mining companies and or countries like the Kingdom to partner with the junior explorers, because you have to find this stuff. And it's really hard to raise that money.
There's a potential solution to part of a problem. Frank, you brought us up to the wire on time. Vice Minister, I don't know if you've got all the answers you were looking for here. You've certainly got some responses to your challenge, which I hope is food for thought. Can I thank you for setting up this panel in the first place? And indeed, ladies and gentlemen, to our panelists, thank you very much indeed, chaps. Thank you.
Thank you.